So today we are going to talk about what trend trading is and how you can utilize the functions of Share Predictions mobile app when developing your own trend trading strategy. So it's basically a trading strategy that is executed by entering into a long position at the start of an uptrend and exiting from the long position when the downtrend starts. Let's illustrate it with a simple example. Let's assume that the green line is representing the price trend of a stock over a certain period of time. As you can see, roughly at point A, we see the start of an uptrend, and this uptrend continues until the point B on the timeline. And the period from point A to point B represents an uptrend, and if we manage to buy the stock roughly at point A and sell it roughly at point B, we can actually realize a profitable trade. But there are two major problems here. If we are at point A and do not know yet how the future is going to look like, how do we actually identify the start of an uptrend? And similarly, if we say that we somehow managed to buy the stock roughly at point A, how do we actually figure out that the uptrend ends roughly at point B? So to solve these problems, we obviously need a game plan. First, we need a rule or set of rules to decide when a potential uptrend starts, which will help us decide when to buy the stock. And we also need an exit strategy from our position so that we can regulate when to sell the stock as well. There are different methods one can use to create a game plan, and technical indicators are commonly used for this purpose. So let's define our own rules now. In our strategy, instead of checking technical indicators on one single day only, we'll be following each candidate stock for a few days to confirm the start of an uptrend to minimize the number of false positive signals as much as possible. In our defined strategy, we'll be looking at daily figures only. And on day one, we want that the closing price of the stock shall be below its 20 days moving average. On day two, we expect that the closing price of the stock shall be above its 20 days moving average. It will mean that the price crossed above its 20 days moving average, and this is the first uptrend signal for us. On day three, we expect that the closing price remains above its moving average. And on this day, we also expect that the histogram value shall be above 0. Histogram is calculated by subtracting the signal line from MACD. And if histogram is positive, it is perceived as a bullish signal. And by using this technical indicator, we try to add yet another control to confirm the start of a potential uptrend. If all criteria are met on the first 3 days, we buy the stock on day 4. In our tests, we take the opening price on day 4 as the buy price for the stock that will later be used when calculating profit and loss figures for the trade in backtesting results. In our exit strategy, we will only be looking at the daily histogram value. We do not look at the moving average figures this time because histogram tend to signal the start of a trend reversal a bit earlier than moving averages. So we hold the stock as long as the daily histogram value remains positive. And whenever histogram drops below 0, we sell the stock next trading day. When calculating profit-loss figures in backtesting, we'll be taking the opening price as the sell price from the day when we sell the stock. We tested this approach on top 500 stocks with highest market capitalization from US stock markets. In 6 years, the method created roughly 14,000 buy and sell signals in total. For the sake of testing, we set our initial budget to $100. Assume that we invest $10 on each stock that trigger the buy signal, no matter how our total trading budget changes over the time. And at the end of 6 years, our $100 initial budget reached $1,789, giving a 1,689% profit. As you can see from the graph, it is not a straight line going up. This means that some trades end with a loss, and such trades are mostly triggered by false positive buy signals. The next graph will help us to understand the big picture a bit better. So here we see how profit and loss figures change as the number of days we hold the stock increases. As the number of days increases after the purchase of the stock, the achieved profit increases as well. Up until 15 days, the strategy creates more losses than profits, and the maximum average loss stays at the levels of minus 5%. Starting from day 16, profits start to dominate, and we can observe that achieved profit figures are much higher than that of losses. But this chart does not show the actual number of trades that ended with profit and loss yet. And let's have a look at the next one to get an idea about it. Now, as now seen in the graph, 55% of the buy signals ended with a loss, while 45% of the buy signals returned profit. Even though the number of losses is higher, the overall result is still a profit due to the fact that achieved profit figures are higher than that of losses. Waiting for a longer time for the confirmation of an uptrend before going into a long position can be an option to decrease the number of losses, but our tests show that such a more conservative approach causes the overall profit go down in the long run. So, trend trading portfolio creation is practiced in Share Predictions mobile app with daily buy, hold, and sell signals. Share Predictions is available in both Apple App Store and Google Play Store, and links to our application is available in the descriptions below.